Hello everyone. Welcome to last day of AAA webinar. We were discussing our second past paper, which was of March-June 2021 attempt. I hope you all remember that we started with question number 3 and we completed one part of question number 3. Till now, in AAA webinar, what we have discussed is we completed one whole paper of September-December 2021, in which we discussed exam technique, we discussed complete writing technique, and we developed our complete own answers. Then we started March-June 2021 attempt paper, and I told you people that I have already recorded question number 1, and I will share you the recording of that question number 1. So we directly started with question number 3, and then we will move to question number 2. Okay, so let's continue our discussion on question number 3. Let's continue our discussion and look at what are the issues. Okay, now, so coming back to the question number 3 of March-June 2021 attempt, which we were discussing in the previous class, it was question on Matty company, and it was a basic question on matters to consider and audit evidences to review. Okay, so in the previous class we discussed the first part, that was on railway operating license and going concern. Today we will be moving forward and we will be looking at second issue, which is purchased customer list. I want you all to participate, and as in the previous sessions, you all know my approach, that what we do is that I take contribution from you people also, and then we develop the answers. Okay, towards the end of the today's session, we will discuss the study approach and how to utilize these 15 remaining days till exam more effectively. We will have a discussion on this matter also. Okay, now the brief introduction of the question before starting the part so that you people can remember the numbers. Matty Company is a listed transport company which provides train and bus service for the public on a national basis. The audit of Matty Company for the year ended 31st March 2005 is nearly complete, and you are reviewing the audit working papers. Matty Company is a new audit client for Beth and Company this year. The previous auditor issued an unmodified opinion on the financial statement for the year ended 31st March 2004. Matty Company draft financial statements recognize the revenue of 60.1 million. Last year it was 94.3 million. Profit before tax of 10.5 million. Last year it was 22.1 million. And total assets of 28.4 million last year, which was 31.1 million. Okay, now let's look at the second part, which is purchased customer list. I want you all to concentrate, and I would expect participation from all of you. On 1st April 2004, Matty Company paid $6.9 million to acquire the customer list of Jazz Coaches, a business which was terminating its operations. Jazz Coaches hires out coaches and drivers to private and public sector customers. Its customer list include many highly reputable listed companies and government bodies with a customer relationship and trading history going back more than 30 years. On the basis of this trading history and associated customer loyalty, the management of Matty Company assessed the useful life of the customer list as indefinite. The statement of financial position as at 31st March 2005 recognized the customer list as an intangible asset at a total carrying amount of $6.9 million. In the second half of the reporting period, however, two of the Jazz Coaches' largest customers moved out to a new competitor. The management of Matty Company believed that while it would be difficult to identify a sales value for the customer list at the reporting date, they estimate the value in use of customer list to be $7.2 million. So what the situation is, if you listen to me, what the situation is, that Matty company purchased some customer list. They purchased some customer data, and they purchased this customer data for $6.9 million. Matty company purchased this customer data for how much? They purchased it for $6.9 million. Now, they are not amortizing this intangible asset. Obviously, the customer list is an intangible asset. They are not amortizing this customer list data, and they are arguing that the life of this customer list data is indefinite. They are saying that this data, the list which we have purchased, will continue for indefinite life and we cannot amortize it. Now, I want to ask a question that as per IAS 38, if an asset is an intangible asset and its life is indefinite, then what do we do? So IAS 38 in this regard says that if any asset has indefinite life, what you need to understand is that every year you have to test it for impairment irrespective of the indicator. Number two, at every year end, you should try and estimate its life. At every year, you should try and estimate its life. You should try and reach out its life. Okay? Now, in the second half of the reporting period, some two of the customers were also lost. So this was an indicator that the two largest customers from those customer list have moved away, which creates an indicator of impairment. That in these customer lists, two of the largest customers are no more valid. So there needs to be an impairment. Now the management says that it is very difficult to estimate the value of that loss. They say that it is very difficult to calculate the value of that loss, but they have said that still these customer lists have a value in use of 7.2 million. So now we have to argue IAS 36 impairment also. Okay, now let's look at the requirement that how many marks are given to this issue. There are 8 marks for purchased customer list. There are 8 marks for this purchased customer list issue. Now, if you look at the requirement, your requirement is that you have to cover matters to consider. You have to cover matters to consider, and you have to comment on the audit evidences. Okay, I want you all to concentrate with me. There are 8 marks given on it. 8 marks are given on it. Purchased customer list. Okay. Now please concentrate and be connected with me. There are 8 marks on it. Purchased customer list. Listen to me. Now, you all know that in matters to consider and audit evidence requirement, every point we write, we get 1 mark for it. So what I will do first of all, I will calculate the materiality. See how we have to earn the marks. The exam technique is very important. Now, first of all, what I will do is that this purchased customer list worth $6.9 million. First of all, I will calculate its materiality. That what is its materiality against the total assets. Okay, I want any one of you to please calculate it for me. Purchased customer list worth $6.9 million represents how much? How much does it represent? No one is telling. Represents our total assets are 28.4. Represents 24.2% of total assets. Okay, it represents 24.2% of total assets. 0.2% of total assets, therefore material to financial statements. Okay, so whenever we have a requirement on matters to consider, what we do is that first of all, we calculate its materiality. Okay, now once done with the materiality, let's move forward. Okay, once done with the materiality, let's move forward. Now we will discuss the correct accounting treatment, that what the accounting standard says in this regard. As per IAS 38, intangible assets. As per IAS 38, intangible assets, purchased customer list should be reviewed for impairment every year by METI company, irrespective of indicators, if its useful life is indefinite. Further, METI company try and estimate should try to estimate its useful life at every year end. Okay. First of all, what does IS 38 say? Now, the management of the METI company says that in our opinion, the useful life of this asset is indefinite. Okay, they say that the useful life is indefinite. Okay, so if you say that the life is indefinite, then what does the IS 38 says? So we have commented on it. Okay, now if their basis that the life is indefinite is wrong, what you need to understand is, if the management's basis that the life is indefinite is wrong, what will be its impact? The impact will be that yearly amortization expense will be missed out. Okay. Now, auditors should auditors should review auditors should review management's basis of indefinite life of customer list, as otherwise amortization expense will go unrecorded. In that case, profit and intangible asset of customer list will get overstated. Okay, see, my approach, if you read all of my answers, my approach is to write small paragraphs. Go for 1 mark, don't go for 3 marks together. Calculate materiality, commented on the accounting standard, commented on the amortization issue. Now let's move forward. He said that in the second half of the reporting period, two of the JES coaches, see, this is not an audit risk question, this is a matters to consider question. There is a difference. Audit risk is an audit planning situation. Matters to consider is a during audit situation. Matters to consider is a during audit situation. In matters to consider, our approach is bit different. In matters to consider, for every matter we get 1 mark. Okay. In audit risk, we used to comment on a single risk. We don't go in too much detail. But in matters to consider, we develop small matters. If you try and understand the meaning of the question, matters to consider, this means what are the different matters which you will think on it. So the different matters include the IS 38 issue. The different matters include that if the amortization is not done, then what will happen? So it is similar to audit risk, but using the word same will be different. Okay, it is similar to audit risk, but while writing matter to consider, we go in more detail. Coming back. Now, in second half, two of the JES coaches, large customers, moved to new competitor. The management of METI company believed that it would be difficult to identify sale value. First of all, I will comment on impairment indicator. Loss of two of the major customers from purchased customer list create an impairment indicator create an impairment indicator as per IAS 36. Due to loss of major customers, recoverable amount of customer lists may have fallen. If it has reduced below carrying value, then impairment will be required. Apparently, impairment is not required because as per management estimate, value in use of customer lists is $7.2 million. If you look at it, value in use which they have calculated is $7.2 million. Okay, 7.2 million. They estimate the value in use of customer list to be $7.2 million, whereas the purchase price was $6.9 million. Apparently, impairment is not required because as per management estimate of value in use of customer, because as per management estimate, value in use of customer list is $7.2 million, whereas carrying value is $6.9 million. Okay. Now, if management estimate of value in use of $7.2 million is overstated, then impairment expense may go unrecorded, and as a result, intangible asset of customer list and profits will be overstated. I want you all to concentrate on it. Listen to me very carefully. Try and understand the approach which we are following. One very important advice from my side to you people is that try and write small points. Don't write big points like examiner. Write every point with a mindset that it will give you 1 mark. Now, one student is asking that, sir, loss of 2 major customers show that these customer lists do not have indefinite life. My friend, please try and understand the meaning of indefinite. Indefinite means anything whose life cannot be measured. Definite means absolute. Indefinite, which is subjective, which cannot be measured. The problem is that in customer list, like if there are 100 customers, so the company is arguing that we cannot measure. The company is arguing that we cannot measure that till what period of time we will be getting the benefit from these 100 customers. As a result, in our opinion, the life of this customer list data which we have purchased is indefinite. Even though 2 of the customers are lost from that list, but still we don't know that how much time the remaining customers will be giving us the benefit. That's why they are arguing that the customer list data has indefinite life. They cannot measure that till what period of time they will be able to get the benefit from those customers. Okay. So the first thing was materiality. Second thing, we commented that considering IAS 38, what should be done? What does IAS 38 says in this regard? What does IAS 38 says in this regard? Then we said that if management will do a wrong adjustment, then what will happen? Okay, the risk or the heads affected. Then we discussed about the impairment indicator, and then at last we commented on that if the management do not record impairment correctly, then what will be the heads affected. So for matters to consider, at least we discussed materiality, we discussed correct treatment, and then we discussed the heads affected or the risk. Okay, so we are done with 5 marks. We have written 5 points. Now let's develop 3 audit evidences. Now let's develop 3 audit evidences. I want you all to participate and help me in finding 3 audit evidences from this. I want you all to help me and to help me locate 3 audit evidences, because 2 of the audit evidences are very easy and I can easily find them. One student wrote the agreement from Jess Coaches. Yes, very good. You can verify the purchase price and you can take the copy of the bank statement. See, whenever anything is purchased during the year, what you can do is you can take copy of bank statement to verify purchase price paid of customer list of $6.9 million, copy of bank statement to verify purchase price paid for customer list of $6.9 million to Jazz Coaches. Okay, and then same evidence, same thing will be repeat, but this time copy of purchase agreement to verify purchase price paid for customer list of $6.9 million. So one can be the bank statement and one can be purchase agreement, and both of these evidences will be very critical because the purchase was done during the year. Okay, now what can be the third audit evidence? The third audit evidence can be that you can take the list of those customer list and you can identify that how many customers are included in it. Then you can take the management's basis of estimating the value in use. Okay, extracts of management estimation of value in use of customer list to be extracts of management estimation of value in use of customer list to be $7.2 million. Assumptions used in it needs to be substantiated through market data and auditors understanding. Okay, you can recalculate the value in use working. Yes, you can take the minutes of discussion for management that whether their calculation of value in use is reasonable or not. So if you listen to me very carefully, when you go for matters to consider and audit evidence requirement, please listen to me. When you go for matters to consider and audit evidence requirement, it is very easy. Like if you follow a 1 mark approach, you start developing small points. It will be a very easy target. You can easily grab it. It will not be difficult. Like for example, when I started reading it, I said, okay, first of all, I'll calculate the materiality. I'll go for 1 mark. Then there was an intangible asset. Then there was an intangible asset. So we discussed about IS 30, indefinite life issue. Then we commented on the risk that what if the management has done wrong, then what will happen? Then we discussed loss of customers, IS 36. We discussed again a risk that if the management has done wrong, then what will happen? And then we discussed 3 audit evidences: copy of bank statement, copy of purchase document, management estimation. Okay, so one student is asking, sir, what is the approach or what is the method of identifying the audit evidences? See, it is very simple. Like for example, if I have to identify the evidences from it. Now, first of all, he said on 1st April 2004, Matty company paid $6.9 million. So I said, okay, they have paid something. I'll go for a bank statement copy and I'll take a purchase agreement. Okay. If you are an auditor, this will be the basic audit evidences which you will find. Okay. You will pick up all the facts of the transaction and you will start verifying it. You will pick up all the facts of the transactions and you will start verifying it. Okay. Then what you will say, you move forward. A business which was terminating its operation. Just coaches hires coaches and drivers. Its customer list include many highly reputable listed companies and government bodies with a customer relationship and trading history going back more than 30 years. So you will verify this management assertion, that you will verify that whether the Jazz coaches has a 30 years history. You will take extracts of the market data, okay, that whether Jazz coaches has such a history or not. Okay. Now, on the basis of trading history and the associated customer loyalty, the management of Matty company assess the useful life of customer list as indefinite. So you can have minutes of discussion with the management that why they are saying that the life is indefinite, whether they have entered in any such transaction in the past. So when you talk about audit evidences, what you have to do is that you read the transaction and you start thinking that, okay, if the management is giving any factual data, then what will be the evidence through which I can verify it? Okay. Yes, obviously, you have to find the evidences from the scenario. Okay. Now, just 15 days before the AAA exam, you should not be asking such questions. Now, let's move towards the third part. The first part here, the first part here was railway operating license and going concern. The second part was purchase customer list. The last part is chairman's statement, and we are being given 5 marks on it. Let's read the chairman's statement. Matty Company's draft annual report includes a performance review written by the company's chairman, from which the following extract has been taken. It is always a pleasure for me to be associated with such a stable and high performing company as Matty Company. During my tenure as a chairman over the last 5 years, the company business has grown each year and has produced an ever performing return for our investors. Now, in your opinion, is this chairman saying a true statement or he is falsifying the facts? If you remember the previous class when we read this question, if you remember it, now Matty Company's draft financial statement recognized revenue of 60.1 million. Last year, the revenue was 94.3 million. If I just calculate the fall in revenue, my revenue has fallen by 36%. My revenue has fallen by 36%. Last year it was 94.3. This year it is 60.1. My profit before tax was 22.1 million and this year it is 10.5 million. So my profit has fallen by 52%. And the chairman is saying the company's business has grown each year and has produced an ever performing return. So this means that chairman is giving a false statement. The audit working paper include a note of discussion with the company's finance director in which he commends chairman performance review and maintains that everyone understands that it is the chairman's role to promote the company with a positive narrative. Now this creates an issue of integrity. The finance director is rather than to accept his mistake, he's saying no, the chairman is doing very good. There is no issue in saying a false statement. So now what are the matters which we should consider? First of all, we will consider that chairman's statement is not part of audit opinion. What you need to understand is that our audit opinion is on financial statement, but our audit report includes a comment on other information. If you people remember the audit report, in audit report we include a comment on other information. So chairman's statement is not part of audit opinion, but it is part of audit report. We comment on the other information, and chairman's statement is part of the other information. So first of all, it is our responsibility. Secondly, chairman is fabricating the facts. He is saying false things. Third, the finance director is saying that there is no issue in it, and chairman's work is to show a positive narrative. This is completely wrong. And this creates a doubt on their integrity. Later on, they will do some manipulation in the financial statement and say that it is our work to show better results. Your work is to show true results, not to show fabricated results, not to show the manipulated things. Okay? So I think it is a very, very easy part. Very easy part. Even the whole question is very easy. Okay? So see, if you look at it, this is the fourth question which you people are doing with me. None of the question was difficult. Only thing which you people need to understand is that you have to practice, you have to get the papers, your confidence, and you need to learn the right writing approach. In matters to consider, we do not write the impact on opinion. Matters to consider is not a reporting question. In matters to consider, we discuss that what will be the matters which will be considered. We will not write about the impact on the audit opinion, but we will describe the responsibility. So now for chairman's statement, we have 5 marks. So 5 marks means 5 points. Okay. Now matters to consider. I have underlined it for you people also. Comment on the matters to consider and the audit evidences. Now for chairman's statement, how many marks do we have? We have 5 marks. Now, chairman's statement is part of other information included in annual report. Okay, it is not covered in auditor. It is not covered in auditor's opinion. In auditor's opinion, as audit opinion is on financial statements only. However, in audit report, auditor has to comment on other information included in annual report, that whether it is consistent with financial statements or not. Okay, so obviously, first of all, like when there is an accounting issue, I write the accounting standard. Here I will write the responsibility of the auditor, that yes, this matter is the responsibility of auditor. Okay, in case of Matty company, the chairman's statement includes a false claim that company's performance has improved every year. Okay, this is a false statement. Why is it a false statement? Why is it a false statement? Because in reality, the company performance has not improved this year. In case of Matty company, the chairman's statement includes a false claim that company's performance has improved every year. This year, company has suffered a fall in performance as its revenue has declined by 36% and its profit has declined by how much? If someone remember, we calculated it also. By how much the revenue has declined? Will someone tell me? 94.3 minus 60.1 divided by 94.3. So 36% is the revenue decline, which we wrote right. 10.5 minus 22.1 divided by 22.1. It has declined by 52.4%. Has declined by 52.4%. Okay. So the chairman's statement this year includes a false claim. Okay. Now let's talk on the finance director. Finance director's argument that there is no issue in false claim included in chairman's statement because it is responsibility, or because everyone knows that it is work of chairman to give a positive view of company. Okay. Finance director's argument that there is no issue in false claim included in chairman's statement because everyone knows that it is work of chairman to give a positive view of company is wrong. Chairman should write true statements rather than giving false claims to develop positive view of company. Okay, this is the wrong approach. This is not the work of the chairman. The chairman's responsibility is to tell what is true. He should not be fabricating the facts. Okay, this issue creates doubt on management integrity. Okay, this creates a doubt on the integrity of the management because the finance director don't think wrong as wrong. He has a justification of doing wrong things. This creates doubt on management integrity. Finance director do not consider manipulation or do not consider giving false statements as wrong. Beta, he do not considers false statements as wrong. If he do not consider false statements as wrong, this is a very big issue. He may use this justification on other matters also. This issue creates doubt on management integrity. Finance director do not considers giving false statements as wrong. He may use this justification to do other falsifications also. Okay, so what are the matters which auditor should consider? What are the matters which auditor should consider? So the auditor should consider that it is the responsibility of auditor to report on other information. The auditor should consider that there is false statement. The auditor should consider that argument of the finance director is wrong. The auditor should consider that this creates doubt on overall integrity. Now, what audit evidence the auditor should have? What should be audit evidences? Now, audit evidence can be minutes of discussion with finance director and those charged with governance on false statement included in chairman's statement. Okay, we should discuss it with the finance director and we should discuss it with those charged with governance because this creates a concern on their overall integrity. Okay, now our 5 marks are completed here, but you can include one more evidence also. Now auditor should check other information more in detail. This has increased our skepticism. This has increased our doubt. It creates a concern that, okay, they may have manipulated. other things also in the other information, like the director's report or other some ratio analysis also, because at the end of the day they can say that okay, there is no issue because it is our work to give a positive image. Okay, so like 5 marks are completed, but if you want to add one more evidence, like if someone forgets one or two matter and he wants to increase the evidence, what he can do is that he can write that extracts of detailed review of other informations included in the annual report, because this issue has created doubt on overall integrity of the management. Are you people getting it? So when we talk about matters to consider and audit evidences, listen to me. When we talk about matters to consider and audit evidences, what you need to understand is that you will get 1 mark for each matter. You will get 1 mark for each matter. And you will get 1 mark for each audit evidence also. Okay. Now, one very important thing what you need to understand is that for audit, there is no mandatory breakup. There is no mandatory breakup that you have to include equal matters or equal audit evidences. Okay. There is no mandatory breakup that you have to include 3 matters and 3 evidences. There is nothing like that. Okay. You can use your own balance. If you give audit evidences in form of bullet, that will be better. Otherwise, there is no issue in it. Okay. So there is no fixed balance. You can change the, like you can increase evidences or you can increase matters equally. So railway operating license and going concern. Railway operating license and going concern. That was the first issue. If you people remember, we did it in the previous class. Today we started with these purchased customer list, IS 38 matter, and then IS 36 matter. And then we discussed this chairman statement matter. Are you people getting it? Please confirm me. Is it clear? Okay. Now let's move forward. Now the requirement A is done. The 20 marks requirement is done, matters to consider. Now let's move forward. I want you all to please participate with me. Now update and draft audit report. It is now 22nd July 2005. Please listen to me. It is now 22nd July 2005 and all matters in relation to purchased customer list have been resolved satisfactorily. Okay. There were 3 issues in the question, if you remember. One issue was railway. Please participate with me. One issue was of railway. One issue was of customer list and one issue was of chairman. There were 3 issues in the question. It is now 22nd July and all matters in relation to purchased customer list have now been satisfactorily resolved. Now, so now 2 issues are remaining. Following the submission of a customer petition to the government complaining about the poor service levels on 19th July 2005, the government released a statement announcing that it had withdrawn Meti company's preferred bidder status and was reopening the tender process to the National Railway license. If you remember the previous class, in the previous class, we discussed this railway issue, that this was a very significant material and pervasive contract which we were about to lose. Okay, but in the previous class, there was a good thing that the government gave us a surety that you are still in a preferred list. But today he is saying that you have been withdrawn from the preferred debtor list. So this means that this creates a material uncertainty on GC. The company's finance director has provided details of a short disclosure note he plans to include in financial statement which refers to the uncertainties in relation to the current status of a tender and possible going concern issues which might arise for the company as a result. Now he just gave a short disclosure note. Now this is wrong. You have to give a detailed disclosure note. This is a significant contract. If I give you a reminder, this contract was worth how much? This contract was worth 106% of our PBT. If we lose this contract, we will go in losses. So this was a material and a pervasive contract. Now he says that I will give a short disclosure note in the financial statement relating to uncertainty. The disclosure note concludes with a statement that the management of METI company is very confident that the company will be successful in the tender process and it will retail the national railway license for a period of at least 5 years. My friend, on what basis you are confident? Now you are no more in preferred bidder status. The draft audit report includes an unmodified audit opinion. The audit report is wrong. And a key audit matters section which refers to disclosure note described above and to related uncertainties, METI company going concern status. The requirement number 2 says, which is of 5 marks, with reference to Exhibit 2, assuming that no further adjustment will be made to financial statement. No further adjustment will be made in relation to railway operating license or the chairman's statement, evaluate the appropriateness of the draft audit report prepared by the audit supervisor. The draft audit report suggestion given by the audit supervisor is wrong. What should be the right approach in your opinion? I want an answer from you people. One student is saying that MUGC para should be added. I want all the students to reply me on the question tab. The audit supervisor says that the audit opinion should be unmodified and this issue should be referred in key audit matter. What is the audit supervisor saying right thing or he's saying wrong? One student said that, sir, there will be adverse opinion. Now, yes. See, please listen to me. The first very important thing is that this contract is a material and pervasive contract. This contract is a material and pervasive contract, and the disclosure which is given by the management is wrong. Now, if their disclosure is wrong, this is a misstatement in financial statement. This is a misstatement in financial statement. This is a misstatement in financial statement. If it is a misstatement in financial statement, then it will lead to change in audit opinion. It will lead to change in audit opinion. Okay. So now read the requirement. Very easy requirement, very easy 5 marks. With reference to Exhibit 2, assuming that no further adjustment will be made in relation to railway operating license or the chairman's statement, evaluate the appropriateness of the draft audit report produced by the audit supervisor. So let's solve it. Very easy, very beautiful 5 marks. Okay, let's look at it. I want you all to concentrate on it. Now, this current disclosure given by finance director in relation to railway contract is insufficient is insufficient, current disclosure given by finance director in relation to railway contract is insufficient, and it will create a misstatement. It will create a misstatement in financial statement. Finance director is not giving disclosure of complete situation, and he is falsifying facts that management is confident in getting the contract. In reality, government has issued a press release that METI company is no more a preferred bidder. Is no more a preferred bidder. So this means that there is things to worry about. There is an issue to worry. Okay. Now, railway, national railway contract represents 106% of PBT. Represents 106% of PBT. If you people remember, we have calculated in the previous part. It represents how much percentage? It represents 106% of PBT and 66.8% of the revenue. Represents 106% of PBT and 66.8% of revenue. Therefore, it may be pervasive in auditors' opinion. Pervasiveness is a matter of auditors' judgment, defined as a level where, in auditor's judgment, a misstatement affects overall meaningfulness of financial statement. So this national railway contract represents 106% of PBT and 66.8% of revenue. Therefore, it may be pervasive in auditor's opinion. Pervasiveness is a matter of, now I have told you people in the previous class also that the auditing standard do not give a fixed criteria of pervasiveness. Okay. Now you can write that therefore it may be material and pervasive in auditor's opinion, but for pervasiveness you have to refer that it is a matter of auditor's judgment. Okay. If this misstatement is material but not pervasive in auditor's opinion, then auditor will issue a qualified audit opinion. However, if in auditor's opinion it is material and pervasive, then auditor will issue an adverse opinion. Okay. If auditor is able to convince management to give a complete disclosure in financial statements, then audit opinion will remain unmodified, and then this issue will be referred in material uncertainty ongoing concern paragraph in audit report. Audit supervisor suggestion to give it in KAM, in key audit matter para, is wrong. Okay, I will repeat it again. I want you all to listen to me very carefully. There were 5 marks in this question. The examiner said that with reference to the exhibit 2, we have to comment that whether the audit supervisor suggestion, the draft audit report includes an unmodified opinion and a key audit matter section which refers to the disclosure note described and to related uncertainty in relation to Meti Company GC. So we said that first of all, the finance director's disclosure is insufficient. It is wrong. Then we said that this issue is material, that is confirmed, but pervasiveness is auditor's judgment. Then we discussed that how it will affect the audit opinion. And even if the management gives a complete disclosure, then also it will not become part of CAM. Then also it will become part of MUGC para. It will become part of material uncertainty ongoing concern para. It has nothing to do with CAM para. Okay, now let's read the requirement. With reference to Exhibit 2, assuming that no further adjustment will be made to financial statement in relation to railway operating license or the chairman's statement. Now, in relation to chairman's statement also there is a correction. In relation to chairman's statement, misstatement, auditor has to refer this issue in other information paragraph of audit report that chairman's statement includes a material misstatement of facts. Other information paragraph will now be stated before key audit matter paragraph. Now, if you people remember the audit report format, in audit report, if there is a modification of report, the concept is that the other information paragraph moves above the CAM paragraph if there is a misstatement in other information. So I will repeat it again. I want you all to listen to me very carefully. This was a very simple part. With reference to Exhibit 2, assuming that no further adjustment will be made in relation to railway operating license or the chairman's statement, evaluate the appropriateness of the draft audit report produced by audit supervisor. Now, in the draft audit report, the supervisor says that we will give unmodified opinion and we will refer this issue in CAM. So we said that this is wrong. First of all, what you need to understand is that the current disclosure given is wrong. So it is a misstatement. If it is a misstatement, we need to think about materiality and pervasiveness. It will affect the audit opinion. Even if the management corrects this issue, then also it will not go in CAM. It will go in MUGC. But that will happen if it is correctly disclosed. And lastly, we talked about the chairman's statement. Yes, you can write that basis of qualified opinion will be added. You can write about that also. You can write about basis of qualified opinion matter also. Yes, because that will also be included in the audit report. But since there were 5 marks and I have completed my 5 marks, so I didn't proceed. Okay, I restricted my answer. Okay, my approach is very simple: 1 mark for each comment. And when the marks are over, please stop. Okay, so if you look at it, we completed 25 marks. Such an easy question. The first question was on matters to consider and audit evidences, railway operating license and going concern. Then we did purchase customer list today. then this chairman statement issue, and then this second requirement. Is it clear to everyone? Please tell me. Okay. So I think that by now, you people must have got a confidence that yes, we can do it. Okay. So rather than just studying the book or your teacher's lectures, my advice is that in last 15 days, give some time to past papers. Okay. Give some time to past papers. So when you do the past papers, you get the right direction. You get the, okay, now I can do it. Until and unless you will go for past papers, okay, until and unless you go for past papers, you can never gauge your performance. My friend, we have done 2 recent past papers. The exam difficulty level is always similar. The only thing due to which students fail in this exam is lack of practice. Their direction of preparation and the examiner's expectation is different. Okay, let's move to the next question, which is question number 2. Okay, so we have completed question number 3. We are going reverse in this question paper. Now let's move towards question number 2. Now, this is the question number 2. Let's read it. Let's read it. I want you all to concentrate. Okay. It is 1st July 2005. You are an audit manager in James and Company, a firm of chartered certified accountants. Your role includes performing post-issuance audit quality review, and you are currently reviewing the audit of the bond group, which had a financial year ended 31st January 2005, and in respect of which an unmodified audit opinion was issued last month. Okay, so we are doing post-issuance review. Post-issuance review means that the audit report has been issued already, and we are now doing a quality control review. The group supplies computer components specializing in the graphic cards. You are reviewing the group audit files as well as the audit files of the 4 of the group subsidiaries. All 4 of these subsidiaries are significant components of the group and have a financial year end of 31st January 2005. Each subsidiary's audit opinion was also unmodified. Okay, so what we are doing is that we are doing a review after issue of the audit report. Okay, now you have been provided with the following exhibits which provide information about the bond group and the points you have identified for each subsidiary in the group. Cameron Company, points you have identified from your review of the information. Marsden Company, Dean Company, and Horner Company. Okay, so we are provided with the data about 4 companies. What is the requirement? If we read the requirement, then we can write in a better direction. In relation to the matters described in Exhibit 1 to 4, comment on the quality of the planning and performance of the group audit and the audit of the component audit, discussing the quality control and other professional issues raised. Now, normally, students think that quality control is a difficult question. Normally, the students have an opinion that in quality control questions, we get stuck. But I always give an advice to my students is that whatever the question comes in your exam, whatever the question is, if you think that the question is difficult, it's non-routine, leave it for the end. But when you are solving it, do it with a relaxed mindset. Do it with a relaxed mindset. Okay. Now, when you are doing a question of quality control, very simple piece of advice. Write small points. Go for 1 mark for each point. Go for 1 mark for each point. The examiner can give up till 2 marks if he likes your explanation. But I always say go for 1 mark. Write small points. In quality control question, whatever problem you identify in the question, write it. It can be ethics issue, it can be professional issue, it can be accounting issue, whatever you identify. Okay. So in relation to each of the audit matter, what we have to do is that we have to comment on them. So what I will do is I will start developing my answer, but obviously we haven't read each of the part. So question number 2. Okay, this is my requirement. Now, in respect to the matters described in Exhibit 1 to 4, comment on the quality of the planning and performance of the group audit and the audit of the components, discussing the quality control and other professional issues. Okay, how many marks for this part? 8 marks. For Cameroon company, we have 8 marks. So I want 8 points from you all. Let's start reading this Cameroon company. I want you all to participate with me. Okay. Are you people ready? Shall we start reading it? Everyone, now let's start. Please concentrate. I want you all to tell me some points. Your firm audits all of the group companies with the exception of Cameroon company, a subsidiary which was acquired during the last financial year. Cameroon company was acquired by the group in April 2004 and is audited by Carey Associates, a small local firm. Cameroon company outsources its internal audit function to Carey Associates. Please wait a minute. Please wait a minute. Cameroon company year-end audit is also done by Carey Associate, and Carey Associate also do its internal audit. Is there any issue? See, if you people will not participate with me while solving the question, will not enjoy it. Now you are writing probable detection risk. What is the detection risk? There is a self-review threat that in the component audit. Now, what I want from you people is to think simple. Now, the major problem with you people is that you people want to bring something difficult. Now, you people enjoy to make easy questions difficult. Right? Very simple. See, Cameroon company is one of the group company. It was audited by Carey Associates. It was audited by Carey Associates, and Carey Associate also do its internal audit. So there is a self-review threat. Or one very good point which student wrote, that internal audit function is a management responsibility. It is not the responsibility of the external auditor. Okay. So what I will do is I will go in the question and I'm just making a list of points first. Self-review threat of component auditor, and second I can write accepting management responsibility, because doing internal audit is the management work. Very good. Now I want you all to be very clear. Okay, I don't want any further error. The section of the external audit working paper provided by Carey Associate and relevant to internal control contain very little documentation other than a cross reference to the files maintained by the internal audit team and a statement that we can rely on the internal controls as they were tested by our firm in May 2004. Not only Carey Associate do the internal audit, the bigger error is that they didn't do the audit. They said that, okay, we tested the internal controls, so what is the point of checking the controls again? What is the point of checking the controls again? So this means that no testing of internal controls, no testing of internal controls done in external audit. Okay, note, see, I can see a list of wrong points which you people are writing. One student wrote integrity issue. Now, what is the integrity issue in it? Why are you writing integrity? Did someone say any false statement? Please, it's my advice. Don't do like this. This is the reason why you people fail in the exam. I can't understand why don't you people think simple. See, we are the group auditor. Now, one student is saying small local firm may lack competence. Why? Why? Where is it written that small local firms lack competence? Why do you people do like this? Why don't you stick to the question data? Cameroon company is a component. Please listen to the scenario. Try and understand the scenario. Don't get flowed out in your emotions. Cameroon company is one of the component of the company. Its external audit is done by Carey Associates. Simple, listen to me. Its external audit was done by Carey Associates. Now, Carey Associates also do the internal audit of Cameroon. So there is self-review thread, and the Carey Associate is accepting the management responsibility. Then, during the external audit, Carey Associates did not perform the audit work. They said that since we tested the controls, so there is no need to do it. Simple, highlight this issue. One more issue. They tested the controls in May 2004. Please listen to me. They tested the controls in May 2004. Whereas, what is the year end if you people remember? Can anyone tell me what is the year end? What is the year end? I think year end is different. Year end is 31st January 2005. You need to test the controls every year. Year end is 31st January 2005. They said that we tested the controls in May 2004 and there is no need to test the controls again. So one major issue is timing. Timing of control testing is wrong. Tested in May 20x4 and year end is 31st January 20x5. So you need to test it at the year end. See, if you go with a very simple approach, one simple piece of advice, think simple. Don't extrapolate in your mind. Don't think difficult. Think in a simple manner. Pick the easy points first. Okay, let's come back. In respect of the Carey Associate, the group audit working papers contain the following statement. Our firm can rely on the work of Carey Associates as one of the James Company audit partner. As one of the James Company audit partner left the firm and became an audit partner at Carey Associates. Now, what is this type of justification? It is the responsibility of the group auditor to review the work of component auditor. You didn't review the work of the component auditor only because your partner also works there. So, no review of component auditor work. And then familiarity issue in review of component auditor work. Yes, because group audit partner joined there. Okay, you can refer it as lack of care also. Now, other than some background about Carey Associates which had been printed off from the firm's website, to provide the background information. There is nothing else to file in relation to the firm. This type of auditor should be now, but due to such a useless auditor, you get a very easy question. Okay, he has done such so many obvious errors. Okay, no review done on competence of component auditor. Reliance on website is not sufficient. Okay, it is the responsibility. It is the responsibility of the group auditor to review the competence of the component auditor. To review the competence of the component auditor, number one, and number two, to review the work of the component auditor. Okay, so nothing was done. The group audit working papers also include a note in relation to the consolidation of Cameroon company into Group FS. Cameroon company prepares its individual financial statement using local accounting rules, which is allowed under national regulation. It does not use IFRS. The group audit partner commented in the working papers that local accounting rules are very similar to IFRS, so there is no need to perform any additional work in relation to consolidation of Cameroon company due to it using different accounting policies to the rest of the group. Obviously, this is wrong. Obviously, this is wrong. As per IFRS, you have to first translate it to the IFRS and then you will consolidate it. Despite that it is using different accounting policies, then also you are consolidating it. What a great audit partner. Group audit partner approach is wrong. Translation to IFRS and uniform accounting policies is mandatory before doing consolidation. So it was a simple, beautiful question of 8 marks. Now this was a question I would not have lost 1 mark even. Such an easy question, such an easy topic. Okay, so let's start developing it. Component auditor. Now 1 mark for each point. Component auditor of Cameroon company, Carry Associates, if I'm not wrong. Carry Associates also provides internal audit services to Cameroon company along with external audit services. This will create self-review threat as due to internal audit services already provided during the year, Carry Associates may not audit internal controls at year-end using independent skepticism. Okay. So, component auditor, I will repeat it again. Please listen to me. Component auditor of Cameroon company, Carry Associates also provides internal audit services to Cameroon company along with external audit services. This will create self-review threat as due to internal audit services already provided during the year. Carry associate may not audit internal controls at year end using independent skepticism. Clear? 1 mark. Secondly, by providing internal audit services to Cameroon company, Carry Associates has accepted responsibility for management work. It is management responsibility to conduct internal audit, while being an external auditor, Carry Associates cannot accept management responsibilities. Okay? Either it is a listed client or it is an unlisted client, it is an issue. In listed client, it is completely prohibited, but in unlisted also it is an issue. Okay? Further, control testing of Cameroon company was not done at year end of 31st January 20x5. Reliance was done on control testing done in May 20x4. It is wrong, as auditor should have tested controls at year end. Okay, you cannot rely at during the year events. You should test the things again at the year end. Are you people getting it? Please confirm me. No one is responding on the questions tab. Are you people with me or you have gone? Hello. Okay, so the first thing was that component auditor should not be doing internal audit. Number one, self-review. Second was that you are accepting the management responsibility. Third, at least do control testing at the year end. You are relying on the control testing done in May 2004. This is obviously wrong. Okay, then coming to the group audit partner, we have made the list of the points. Okay, now point number 3 we missed out. No testing of internal controls was done in external audit. Carry Associates did not perform detailed control testing during year-end audit. They relied on their internal audit work already done during the year. This is a wrong approach, as during external audit, auditor must perform control testing. Okay. Now, basically, they materialized the self-review threat. The doubt which was the self-review threat, they materialized it. This shows the lack of professionalism. This shows the lack of knowledge about the audit. Okay. Now, group auditor. Who is the group auditor? Which is our firm. Okay. Now, one student is asking, sir, if control testing was done on the year end again, detailed work was also done, then what was the issue? Then also there was an issue, because your self-review would still exist. Your self-review would still exist. But at least I would say that you did the testing. But still there would be self-review, because in the back of your heart, you must be feeling that I've already tested it. So you would not be testing it with the full skepticism. It is just like you wrote your exam paper and you are checking it again. Even though you check it with very honesty, but still in the back of your heart, you will have a feeling that, okay, since I have done the paper, so I must have done wrong. Yes, it is not prohibited, but the ethical standards say that you should use the safeguards, like you should use separate team, and the other safeguards can be like you should use separate review. So you should use other measures which we haven't used in this case. Okay, so there should be safeguards. Group auditor failed to perform review of component auditor work. Our firm, which was the group auditor, failed to perform review of component auditor work. Review of component auditor work. It is responsibility of group auditor to review work of component auditor. Group audit partners justification that since our firm partner has joined Carey Associates, the component auditor, therefore there is no need to review. Their work is wrong. It is the responsibility. It is the responsibility of group auditor to review the work of the component auditor. Our firm can rely on the work of Carey Associate, as one of James' company audit partner left the firm to become an audit partner at Carey Associate, and he was involved in the work. This is wrong. Even this is the familiarity threat. Even this is the familiarity threat that our firm partner is doing work on the client, and the client whose we are the group auditor. Okay. No, there is no need to refer the relevant ISA or things like that. Okay. You just need to develop the commentary. Further, a familiarity threat was created in group audit work as group auditor was required to review work of one of its ex-partner who joined Carey Associates and was involved in audit of Cameroon company, which is a component of group. Please listen to me. Further, a familiarity threat was created in group audit work as group audit was required to review work of one of its ex-partner who joined the associate and was involved in audit of Cameroon company, which is a component of group. Group audit partner will not be able to audit work of his ex-partner with independent skepticism. Okay. I would not refer it as a self-interest threat. It would be much better if you will refer it as familiarity, that due to familiarity this happened. No, there was no particular situation of intimidation in this question. If you read the question, primary reason of not doing the review was his familiarity, that he trusted his ex-partner. Okay. Group auditor also failed to review competence, also failed to review expertise. The group auditor has also failed. Group auditor has also failed to review expertise of component auditor. As per auditing standards, it is necessary for group auditor to review expertise of component auditor. Okay. Only reliance which was done or only information which was obtained was through their website. Okay, so we didn't perform. So we made this list of and we are just developing point. We are developing the points according to this list. Okay, and the last point. Lastly, group audit partner also failed to do translation of Cameroon company financial statements under IFRS. Financial statements of Cameroon company were prepared under local accounting standard. They should be first translated under IFRS and then they should be consolidated with the group FS. Okay, I will give a brief review because we first discussed the entire question, we made a list and then we wrote it. So maybe some students may have got disconnected while we were writing down the comments. Okay, I will repeat it again. Please listen to me. Basically, in this question, we have to identify the quality control. We have to identify the quality control and the ethical issues, the professional issues. Yes, we are going on a break. Just let me give a brief review of this part and then we'll go for a break. Okay, so what was the situation? That we are the group auditor and there is a subsidiary in the group called as Cameroon Company. Cameroon Company is audited by Carey Associates, a local firm of that area. The Carey Associate also provides internal audit to Cameroon. So first of all, we identified that the component auditor Cameroon Company, please listen to me. The component auditor the component auditor of Cameroon Company, the Carey Associate, is providing external audit and they are also providing the internal audit. Now this is wrong. This is a self-review. You cannot do this. It is not permitted. It is not allowed. Okay, but basically it creates a threat. You need to deploy safeguards. So the component auditor is involved in an issue which creates independence matter. Then we identified that the component auditor is accepting management responsibility. Now, whenever we write self-review threat, we always refer this matter. You all know that. Then moving forward, another issue was that the Carey Associate did not perform detailed internal audit, detailed internal controls during the external audit. And they said that since we did the internal audit ourselves, so there is no need to the Carey Associates did not perform the control testing. Now that is also wrong. So here we will refer that they should have performed the detailed control testing because it is the responsibility in external audit. And they relied on control testing of month of May rather than doing control testing 31st of January. Okay. Then the group auditor also failed. The group auditor also didn't fulfill his responsibility. The group auditor said that we will not do a detailed review because our one of the partners joined there and he was involved in the audit, so we can rely on it. Now again, this is wrong. First of all, this is a familiarity issue and not doing review is again a big problem. So there was familiarity issue that our partner joined there. Our partner joined there. This was a familiarity issue. And the group audit partner didn't perform the review. This means that he didn't fulfill his responsibility. Further, we also failed to review the component auditor. We just relied on the data on the website. It is not necessary that data on the website is always true. And then very important, we didn't translate the FS to IFRS and we consolidated it in its existing position. Now, obviously, this is wrong. So there were so many errors. There were so many errors that scoring 8 marks was very easy. There were so many errors that scoring 8 marks in this question was very easy. We wrote 1, 2, 3, 4, 5, 6, 7, and 8. Is it clear? Sir, the internal control test done at year end is to test whether, yes, at the year end, we perform control testing that whether during the whole year the controls are performing right or not. But we do this testing at the end of the year. Now, in this case, they did control testing in the month of May 2004. Now, this means that June, July, August, September, October, November, December, January. In these 8 months, we didn't test the controls because we didn't review the performance of the controls. Okay. Now, see, since the question is silent, that different team was used or not, so we will pick an easier side and we assume that they didn't use the different team. That's why there is a threat. You will get 1 mark for each point, so don't prolong it. Write small points like 3 lines maximum. Is it clear? So now we are going on a break of 15 minutes. We will resume after 15 minutes and then we will complete the rest of the 3 parts. Okay. Okay, everyone, let's resume. Let's resume back. So now we are moving towards part B. Let's look at it. So this part is merged in company. Everyone, shall we start? Um, One student asked question. Carrie here has done internal audit as well, which they should not have done. But in this case, they have already done. Another matter to consider can be whether a quality control review was done by Carrie company or not. Uh, since there is nothing written that they conducted quality control review or not, so we will assume that it was not conducted and we highlighted it as a self-review thread. Okay, so since the examiner is silent, you will assume that that work was not done. Okay, let's resume towards the part B. It is of 5 marks. Merged in company. 5 marks part. Let's start. Same thing. We have to comment on quality control and professional matters. Let's read it. Merged in company. Merged in company is located some distance from the rest of the group, and it is audited by a local office of James and Company. Your review has found out that there was no formal reporting from the subsidiary audit team to the group audit team, and communications were often not documented. There was no evidence that the group audit team had obtained a copy of subsequent event review performed on merged in company. And there was no evidence that group related parties had been communicated to the subsidiary audit team. So merged in company is one of the component. Please listen to me. Merged in company is one of the component and it was audited by a different auditor, James Company. It has been found that there was no formal reporting from the subsidiary audit team to the group audit team. Now, in case of group audit, please listen to me. In case of group audit, it is mandatory that subsidiary audit team has to report its findings to the group audit team. Please listen to me. Subsidiary audit team has to report its findings to group audit team, and then group audit team has to review those findings. Your review has found that there was no formal reporting from the subsidiary audit team to the group audit team, and communications were often not documented. So obviously, this has been done wrong. Okay, so there are 5 marks. Again, a very easy question. In case of merged in company, one of the group component, one of the group component, one of the group component, okay, no formal communication was done by component auditor, no formal communication was done by component auditor to group auditor. This is against the auditing standards, as component auditor should report its findings and results of key audit procedures to group auditor, and group auditor should review them. So the first problem which has happened is that there was no formal communication between the component auditor and the group auditor. This means that the component auditor did not communicate his key findings to the group auditor. There was no communication from the component auditor to the group auditor. Okay. There was no communication, and even it was not even documented. So if it was not documented, then what are the audit evidences? The group auditor lacks audit evidences. If later on the regulator questions you, my question is that if later on the regulator questions whom? If later on the regulator questions the group auditor that what was the quality of the work, how did you make sure that the work was done with quality? Then the group auditor has no documentation. Okay, group auditor should have group auditor should have a formal documentation of work done by component auditor, should have formal documentation of work done by component auditor, so that if in case a concern is raised on quality of group audit, then group auditor will have documentation as an evidence to show that audit quality was maintained. Okay, so I will repeat it again. Listen to me carefully. I will repeat it again. Listen to me carefully. See what the responsibility of group auditor is. Please listen to me. What the responsibility of group auditor is, that group auditor should have proper documentation. He should review the work. But in case of Mercedes company, there was no formal documentation done. Now, when there was no formal documentation done, what are the evidences that you have done a review? Okay. Now, another thing, if you read carefully, there was no evidence that the group audit team had obtained a copy of subsequent event review performed. Now, subsequent event review performed by component auditor was not confirmed by group auditor. Now again, this is a wrong thing. This is an issue. Again, this is a wrong thing. This is an issue. Why is this an issue? It is an issue because, please listen to me. It is an issue because it is the responsibility of the group auditor to check the subsequent events. In subsequent events, there can be adjusting events, there can be non-adjusting events which need to be adjusted and disclosed in the FS. Subsequent event review performed by the group auditor, by the component auditor, was not confirmed by group auditor. Subsequent events can include adjusting events whose impact may be required to be adjusted in financial statements. Further, if there are any non-adjusting events, their disclosure may be required. These matters can affect group financial statements also. See, when we talk about, now listen to me very carefully, when we talk about quality control, there is no specific format. We just read the question, we identify the points on which there needs to be some working, there needs to be some additional work, we make a list of them, we comment on them. And there was no evidence that group related parties had been communicated to the subsidiary auditee. Now again, the group auditor should send, Please listen to me. The group auditor should send a list of related parties to the component auditor. So the component auditor can identify the transactions done with those parties. Now, related party disclosure will be incomplete due to it. See, group auditor failed to share list of related parties with component auditor of Marsden Company. Due to this failure, component auditor may have failed to identify related party transactions completely. Due to failure to identify related party transactions, disclosure of RP may be incomplete. And what you need to understand is related party transactions are qualitatively material to financial statements, and their misstatement or incompleteness can affect the audit opinion. Okay? Now see, I will repeat it again. What you people need to understand is that when we talk about quality control, there is no specific approach of the question. We read the question, we identify that what is going abnormal, what is going wrong. We just discuss that. Like you can expect any situation in quality control. Only approach to do quality control is to write small points, do with a relaxed mindset, okay, and whatever issues you find, you start listing them. That first year the issue was that there was no formal communication, so you said that this is wrong because component auditors should do reporting. Then number two, there was no documentation, so how will group auditor prove his quality? There was no subsequent event review. Related party list was not sent. RP transactions are qualitatively material. Now, one student has sent me a question. Listen to this question and then I'll reply. This will be a good learning for everyone. One student has asked, Sir, why the component auditor himself is not identifying all the related parties? Now, what you need to understand is that component auditor cannot identify all the related parties. Why? The component auditor can identify the related parties which are related to his company. Like he can identify key management personnel of that company only. He can identify the family members of the key management personnel of that company only. But if there are 100 companies in the group, then only group auditor can have an access that who are the key management personnel of those 100 companies. Who are the family members of those key management personnel of those 100 companies? Because they are the related parties of the group, not the related party of that company only. Now, how the component auditor can get that data? So it is the responsibility of the group auditor. It is the responsibility of the group auditor to send a list of the related parties, which are the related parties of the group. Then only the component auditor can tell you that, okay, you sent me this list, which was the list of related parties of the whole group. And now these are the transactions which are done in that component related to all of those related parties. Have you understood my response? Okay, so component auditor can never identify those related parties. So this was a 5 marks requirement. So we wrote 5 points, 1 mark each point, the best approach, and write small points. First of all, we said that the component auditor should have complete communication. Then we commented on formal documentation. Then we commented on subsequent event review. Then we commented that list of RP should have been sent. And then we commented on the disclosure. Okay. Let's move forward. Okay. Now, one student has asked, can you please briefly tell me how do we review the expertise of component auditor? We review the expertise of component auditor by asking about the experience of the audit partner, by asking about the qualification of the audit partner, by asking about the expertise of the audit team which was used. Now see what you need to understand. Let's take an example. For example, you are a group auditor and you are a big firm. Now you have to rely on the work of a component auditor. So obviously, before relying on someone's work, you will ask about his qualification, you will ask about their experience, you will ask about their systems, you will consider their market reputation. Because if that component auditor, is not good, how can I rely on his work? How can I rely on his work? Just give it a thought. We can check their rating. We can check the expertise of the audit team which was used. Okay. Now, so we have to look at their expertise and we also have to review their work also. Now let's move towards the third requirement. The third one is Dean Company. Okay. So basically these are the 4 different companies and we have to comment on the quality control issues of all of these companies. Dean Company owns a small number of shares in Cordin Company, amounting to 2% of shareholding. The investment is accounted for as a financial asset at fair value through P&L, as required by IFRS 9. Cordin Company shares are not traded in active market, and the value of 68,000, which is recognized in Dean Company FS, is management's estimate of fair value based on an offer received for shareholding in April 2004. The year end is 31st January 2005. They are relying on the offer they received in 2004. The audit team checked the arithmetic of management computation, but did not obtain further evidences because according to the audit conclusion, the value of shareholding is below the group materiality level. The latest financial statement of Cordin Company prepared to 31st January 2005 are included in the audit file to provide background information and show that the company has net assets of 550,000. Materiality for the group FS was determined to be 350,000. Now, $68,000 is how much percentage of 350,000? It is $68,000 was the fair value, was an active fair value, divided by materiality for the group consolidated FS is 350,000. Now he is saying that we are not obtaining the further evidence because the shareholding is below the group materiality level. Now the question is that how are you saying that it is below the materiality level? Because as far as we are calculating it, it is giving 19.4% of the total assets. So, okay, now, sorry, we made a bit error. The materiality of the group, sorry, I made an error. Materiality of the group is 350,000. We shouldn't be taking the percentage, sorry. Now, it is not the value of the asset. The materiality level is 350,000. The value of the asset is 68,000. So they are saying that it is below the materiality level. Okay, I will repeat it again. I made a reading error. He has given us the materiality level. He has given us the materiality level of the entire group, which is 350,000. We don't need to calculate any percentage on this. Materiality level of the entire group is 350,000, whereas the fair value of the assets is 68,000. So it is below the materiality level. Fair enough. But what you need to understand is that the group materiality level is not used while we are doing component audit. The group materiality level is divided on the components first. Please listen to me. If the group materiality level is determined as 350,000, then this do not means that in every company we will leave issues of 350,000. Because like if there are 4 subsidiaries, 350, 350, 350, 350, the total will exceed. The total issue will exceed. I will repeat it again. The group materiality level is 350,000. We shouldn't be comparing this issue with the group materiality level. Rather, we should be comparing it with the materiality level which we allocated to that component. See, if there are 4 subsidiaries in the group, let's take an example, and the group materiality level is 350. So it is not like 350, 350, 350, and 350. What we do is we allocate this 350 into these 4 companies, and then we do the component audit review. Okay, it will get more clear when we will develop the answer. Okay, now Dean company, how many marks is it? Okay, so it is also 5 marks. Please listen to me. Okay, now in Dean company component audit, audit of valuation of investment, in shares of Cording company was not done. Please listen to me, was not done in detail on the basis that their value of $68,000 was below group materiality level of $350,000. I will repeat it again. Okay. Just a second, this mouse cursor. Now, see, the 68,000 was the value and the group materiality level was 350,000. Okay. Now, what we are saying is in Dean company component audit of valuation of investment in shares of Cording company was not done in detail on the basis that their fair value of 68,000 was below group materiality level of 350,000. This is wrong approach, as component issues should not be compared with entire group materiality level. They should be evaluated against materiality level allocated to that component. I will repeat it again. Listen to me. The group audit team did not perform the audit of this investment in detail. See, what is the situation? There is an entire group. In that entire group, there is one company called as Dean company. Now, Dean company, one component has done an investment of 68,000. So we didn't do the audit of this investment in detail on the basis that it was below the entire group materiality level. What you need to understand is that we shouldn't be comparing it with the entire group materiality level. We should be comparing it with the materiality level allocated to that component. Is it clear? Then let's move forward. We have to write 5 points. Now the valuation of it was done on the basis of management estimate of fair value. So we will say that management estimate of fair value was based on April 2004, whereas year end is 31st January 2005. Okay. Management estimate of fair value was based on offer received in April 20x4, whereas year end is 31st January 20x5. Okay, valuation should be done at year end rather than picking up value of rather than picking up value of during the year. So picking up the value of April, it is like a value which is April, May, June, July, August, September, October, November, December, January. It is almost 9 or 10 months old value. How can you use it at the year end? So obviously it is wrong. We cannot use that value. We cannot use that value. The audit team checked the arithmetic of management's computation but did not obtain further audit evidence. Okay. Only obtaining arithmetical, only checking arithmetical valuation was not the right approach by audit team. Okay. They only verify a single assertion of accuracy of valuation. Okay. Now apparently the data is completed till here. Now what were the issues in the question? There was an issue of materiality. We covered it. There was an issue of materiality. We already covered it. There was an issue that management estimation was wrong. We covered it. Then there was an issue that auditor just looked at the arithmetic of management computation. We covered that also. Now you have to complete 5 marks. You have to develop 5 marks. So you will use some additional approach. Like what you will do, that auditor should have verified valuation through market data or using steps defined in IFRS. Auditor should check for valuation of similar securities, of similar shares traded in market, or would have used internal data of company to value the investment. Okay, so if you remember the valuation IFRS 13 fair valuation. So IFRS 13, if you remember that 3-step approach, if the active data is available, if the active data is not available, you look for similar company data, and if the similar company data is not available, then you pick up the company valuation. Like he has given us some data that Cording company net assets worth 550,000. So if I take 0.02% of 550,000, it will only worth 11,000. Okay, considering on net assets of net assets of Cording company, value of 2% holding should be how much? The net assets are $550,000. The net assets are $550,000. The net assets are $550,000. So it should be $11,000. Okay. Lastly, auditor should also have verified existence and legal rights of shares through their purchase documents. Okay. So I will repeat it again. I want you all to concentrate and listen to me very carefully. What the situation was that one of the component of the group Dean company has invested amount in Corden company. Okay. Has invested amount in Corden company. They had 2% shares. Now, since the shares were not listed, the management valued the shares at 68,000 and they gave a justification that we received an offer in April 2004. Now, first of all, offer of April 2004 cannot be used to do valuation on 31st January 2005. You need to understand this first. Secondly, the group audit team said that we will only check arithmetical valuation. This is wrong. You should take some valuation methods defined in IFRS 13. Then they said that this was below the materiality level of the group. What you need to understand is that the group materiality level cannot be used here. The group materiality level cannot be used here because the entire group materiality level cannot be used on component transactions. You should use the allocated materiality level on this component. Okay. Then we said that based on the net asset value, the valuation of this share will be just $11,000 because 2% of 550,000 will be $11,000. Is it clear? Everyone. So I think these are the general questions which we read and we try to develop the answer. Please respond. Okay. Now moving towards the last part, which is Horner Company. Okay. Last part of the question and last part of our webinar series. So in this, I would request all of you that you have to tell me the points. During the audit of Horner Company, the audit team became aware of a breach of data protection regulation. One student has asked a question, even though it is only a 2% shareholding, can it be material due to its nature being shares? My friend, 2% shareholding in the company is not relevant to decide that whether it is material or immaterial. For material or immaterial, we look at the value of the shares. The value of these shares is 68,000. Now we need to compare it with the component materiality level. What the group auditor has done, he compared the 68,000 with the group materiality level. The group materiality level is for all 4 subsidiaries on accumulated basis. Okay. So we need to compare this value with the component auditor materiality which was allocated. Coming back to the fourth part, Horner Company. During the audit of Horner Company, the audit team became aware of a breach of data protection regulation, whereby an employee of the company made its customer database available to a third party. The disclosure is in contravention of the regulation. So one of the employee of the company breached the data protection regulation. The audit working papers refer briefly to this situation and conclude that it has little to do with the audit. And as no one outside the company is aware, no further investigations were made by the audit team. And the audit manager noted in the working papers that the matter does not need to be discussed any further with Horner Company or the group management team, as I have received assurance that the person responsible for the breach of regulation has been dismissed. Now, there is a breach of regulation, but the auditor says that it has nothing to do with our audit. Now, this is the first thing which is wrong. It is the auditor responsibility that if he gets knowledge of any non-compliance, He has to think about it. So now it is the auditor responsibility. Number one, the running away from the responsibility is not right. It is your responsibility because now you have become aware of a non-compliance. The first thing to learn. The second thing is you need to think about the potential penalties which may get applicable. It may lead to potential penalties on the company because there was a breach of Data Protection Act. It may lead to potential penalties. Okay. It creates doubt on the management integrity. And now it is the responsibility of the auditor to report to the regulator. Please listen to me. It is the responsibility of the auditor to report to the regulator if it is in the public interest. Because under laws and regulation, the auditor has to report to the regulator if the matter is in the public interest. Then we have to report to the regulator also. But if we are reporting to the regulator, we have to go for legal opinion also. So, first of all, we will say that the manager's point that it has little to do with the audit as no one outside the company is aware. This is wrong. This is wrong. This shows lack of integrity even in the audit manager also. Even the audit manager lacks integrity. That he's saying, okay, hide it since no one knows about it. Now you know about it. It is your responsibility to take the required actions. So audit manager's approach is wrong. Audit manager himself lacks integrity. Then it is the responsibility of the auditor to take the relevant actions. Now, what are the relevant actions? Auditor should think about the potential penalties that may get applicable. The auditor should think about reporting to the regulator. Okay. And just the management assurance that they are removing that person is not a sufficient thing. The management should improve their controls and management should be disclosing it to the affected customers that, okay, there was a breach on their side and we apologize to you. Okay. So this part, again, a very easy part. Horner Company. This part is of 7 marks. Okay. So if you look at this question, first of all, what you will say is, audit manager approach that it has little to do with company is wrong. Okay. Audit manager integrity is questionable because he said that since no one know about it, so let's keep no need to work on it. Okay. The responsibility of auditor to take action. It is the responsibility of auditor to take action. Why is it responsibility of auditor to take action? Responsibility of auditor to take action as he has got knowledge about non-compliance. Okay. Impact on FS, there can be impact on FS, potential penalties. Okay. There can be an impact on FS. You need to think about it. You need to think about the penalties. Reporting to regulator if public interest issue. Okay, we need to go for legal opinion if we are reporting to regulator. And above all, company actions are insufficient. What did company do? company just gave an assurance that we are removing that employee. No, this is insufficient. The company should apologize to the affected customers. The company should take further actions also. The company should improve their controls. Okay. We will not discuss about IS 37 in detail because currently no such notice has been received. So we will not talk about IS 37 at this level. But we will say that auditor should think about the legal impact. Okay, are you people getting it? So, first of all, audit manager approach that it has little to do with companies wrong. Secondly, audit manager's integrity is questionable. It is the responsibility of auditor to take action since they have got knowledge about this non-compliance. The auditor should think about the FS impact. If it is in public interest, we have to report to the regulator. But if you are going for regulator, we have to go for legal opinion, and company actions are insufficient. Now, I'm stopping my discussion on the past paper here. I want you all to develop this part's answer on your own. Now, last 15 minutes are remaining. So I would like to give some time to the exam approach, to the preparation approach. Okay, let's have some discussion on how to prepare, how to make these last 15 days more and more effective. Okay, so we have completed this question number 2. Okay, question 3 we already completed. I will share you the recording of question number 1. Okay, now let's talk on general advice that how we should be taking this exam further. Okay, preparation strategy. Now, by now, we have around, I would say, 15 to 20 days left for the exam. We have 15 to 20 days left for the exam. Now, what should be our approach towards the exam? What we should be doing? Now, first thing my advice is give 5 to 8 days. I would say give 8 days for revision of whole course. Okay, revise all topics and read attempt-wise past papers. Okay, or I would say rather than attempt-wise, the better word would be and read topic-wise past papers. Like from whatever tutor you have studied, you must have some topic-wise past papers. Your tutor must have given you topic-wise practice. In these 8 days, you should do the revision of whole course, revise all the topics, and read the topic-wise past papers. Okay. Now, once these 8 days are gone, now in remaining days, focus on attempt-wise papers. Now, what do I mean by attempt-wise papers? Attempt-wise papers means complete attempt papers. Okay. Now, what should be your daily approach? Now, first of all, I would give an advice that take a leave, take an off or leave from your work. Okay. Like give complete dedicated days. At least 7-8 days you should be dedicated to the study. Okay. In morning, write a complete exam paper. Like you should make a target that in the first half of the day, like before 12 noon, you should write a complete exam paper. Okay. Do it in exam situation. Okay. Do the recent papers. Okay. In the remaining day, read at least 3 exam papers through examiner answer. So if you will follow this approach, you will write one complete exam paper daily. And you will read 3 exam papers daily. Okay. So how many papers are done? 4 papers will be done in a day. Okay. 1 paper written and 3 papers in reading. Okay, so you have to read the examiner answer. Send your written paper to your tutor for checking. Take a feedback from your tutor. Now, whoever your tutor is, take a feedback from him. If you are doing private study, ask any tutor, pay a certain fees and ask him that you have to give me a feedback. Okay, repeat this activity for at least 5 days. For at least 5 days, you should be repeating this activity. That daily in the morning, you will write one paper, and in remaining of the day, you will read 3 papers. See, the only thing which can increase your chances of passing this AAA exam is past paper practice. Daily write one paper and read 3 papers. So if you will repeat this activity for 5 days, you will cover around 20 attempt papers. Daily write one paper and read 3 papers. Write one paper, read 3 papers. So daily your target will be to cover 4 papers, one in writing and 3 in reading. Repeat, repeat, repeat. Do this for 5 days. Okay. Last 3 days, do complete revision of whole course. Okay. And read last 5 attempts examiner answers again. Okay. In last 3 days, you have to revise whole course and give some time to read the last 5 attempts exam papers again, so that the examiner approach gets fit in your mind. Okay. Do exam with confidence. Very important thing. Don't write general points. Relate to exam scenario. Now, this is a very important thing. The common error which I find in the papers is that students try and write general answers. Don't try and write general points. Pick the points from the exam scenario. What you people try to do is, now this is because I would say in Pakistan specifically, it is the problem of our tutors that they try and teach shortcuts to the student. Okay, you see this, write this. No, don't do this. AAA exam is a professional exam. The examiner knows all the shortcuts. So you don't want those shortcuts to be applied in the exam. What he wants is the actual point picking from scenario. You write a procedure, refer to the points, refer to the examiner question details. Okay. Primary focus areas which must be done. Primary focus areas. Risk. Now in risk, I mean business risk, ROMM and audit risk. ROMM and audit risk. Cover risk in very much detail. Okay. Revise the accounting standards in detail. Okay. You should have grip on procedures and evidences. You should have grip on audit report, and you should have grip on ethics. If you are good on these 5 areas, your 80 marks in the exam are secured. You should be very strong on these 5 areas. There should be no compromise on it. These are the primary focus areas. I'm not saying that only do this, but if you are good on these 5 areas, your 70-80 marks are secured. Okay. If you people need any help from me, okay, so you people can contact me at 0092-345-8099-831. Okay. After the today's session, I will share all of the recordings. I will share all of the handouts and everything. Okay. Only important thing, believe me, which is important for passing your exam is that you should do the exam with confidence. Read the scenario, answer the scenario. Please, please don't go for shortcuts. If any tutor says you that, okay, whenever you see this question, just copy paste these 4 points, he's just saving his effort. This is wrong. What you need to understand is that the examiner expects the points from the scenario. He don't expect general point. This is triple exam. This is an advanced level paper. And very important thing, time management is very important. One piece of advice, listen to me. Whenever the allocated time for a particular question ends, whenever the allocated time for a particular question ends, like for example, you are giving 1.9 minutes per mark. So for example, if a question is of 20 marks, and in 20 marks, for example, you have to give 38 minutes. Once 38 minutes are over, leave that part, move forward. Okay. Always remember, you get good marks at the start, not at the end. Because towards the end of the answer, you waste your time. Towards the end of the answer, you waste your time. So try and do maximum parts. Try and do maximum parts. Okay. You should start writing along with the reading of the question. No need to read the whole question. Since the paper is computer based, if you will find any extra data later on, you can simply go and add it. You can simply press and enter and add few additional details. Attempt the paper in sequence. Those parts which are difficult, leave the heading for them. You will come back and you will complete them later on if you will get time. Go for the easy parts first. Okay. Best of luck to you all. Okay. Best wishes from my side. I hope that you people will pass this exam with flying colors. If you have any query, you all have my number. And if you need any type of assistance, you people can ask. Okay. Thank you, everyone. Best of luck for your exams.